Lance Roberts here with 3 minutes on markets and money, talking a little bit, of course, about interest rates, oil, and markets this morning. Let's start with oil. That's the big news after the attack on the Saudi oil facilities over the weekend. Oil prices are spiking up this morning. This is a closing chart on USO. Of course, this is the kind of the proxy for oil prices in the ETF market. Look for a move today higher. Of course, this has been in a big downtrend, a big consolidation pattern now, really over the last several months. Oil prices have been under pressure. So this morning, look for a breakout here to the upside. Whether or not this is sustainable is an entirely different matter. The trend has been lower, and of course, rallies have been met with selling. The real issue when it comes to oil supplies, of course, is that we already have an abundance of oil supply. That's why oil prices have been on the decline. This extraction of supply of about 5 million barrels per day is going to be an issue of whether or not that is a sustainable reduction. OPEC members, Russia, China, others, have all been in the process of cutting back production. Do they now reverse in this process of higher oil prices to get prices up? Let's move to markets, of course. This is where the next level of importance is coming in. Markets rallied all the way back to all-time highs here last week. The question is now, can they break out to new highs? Today, the markets are going to pull back here a bit because of this issue with oil prices. The question becomes, is this now another potential top here? We've got a test of a previous high here. Of course, this is also the top of this uptrend range that we've been in really since the December 24th lows. The markets have had a big recovery here. As we talked about in this weekend's newsletter, most of the information regarding trade and other issues, really employment, etc., have all already been priced into the market. The big news this week, of course, not just the attacks on oil prices, also the Federal Reserve talking about whether or not they're going to cut interest rates on Wednesday. Interest rates also have had a very big move here over the last couple of weeks. And as we've seen previously here, these big spikes, of course, you look at this has been a big reversal in interest rates just over the last couple of weeks in particular. But this is well within a consolidated downtrend for interest rates. Interest rates have been moving lower here for quite some time. Again, concerns about economic weakness, debt, these issues weighing on the direction, inflationary pressures as well, weighing on the directional trend of interest rates. Interest rates have been lower. As we said, interest rates are exceedingly overbought. In fact, previous spikes of interest rates have gotten to these levels have been really kind of the peak of the move. So we're looking for lower interest rates here over the course of the next several months. This is going to basically comport into the issues of what's happening with economic growth in the United States, which is slowing. Of course, we're also seeing the impact of other issues now beginning to weigh on markets as well. Higher oil prices is going to translate into weaker economic growth as well, as consumers have to start making discretionary spending choices between paying more for gas and other items. Look for interest rates here, probably have peaked, and this is going to be looking for a lower rate and trend in interest rates kind of returning back towards that 1.5, 1.6% level. This is probably a good opportunity to add fixed income into portfolios as more of a defensive position. We're very late in this current economic cycle. Markets are near highs, really kind of testing resistance here. But a lot of the move higher over the course of just the last year has been an increase in valuations, not necessarily an increase in better economic outlooks. That's your 3 minutes on markets and money. I'm your host, Lance Roberts. Get by the website, realinvestmentadvice.com. Our article tomorrow has actually been covering interest rates, the directions, the trends, what we expect to happen in interest rates and bonds, of course. That's at realinvestmentadvice.com. We'll see you then.